SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
We're back on the Financial Survival Network, and, well, things have been going crazy lately in the markets and seem to shake off the worst possible news. And we've got our friend back with us, Dr. Laurence Kotlikoff, to kind of see where we're headed. Is deflation really going to happen? Or are we going to hyperinflate? Professor Kotlikoff, welcome back.
It's great to be back with you, Kerry.
Hey, so what's your take on what's going on with the markets, the economy? Are we heading headlong into deflation, or where are we going exactly?
Well, there's a lot of uncertainty out there. Or we could be at war with Russia in 6 months. We could be back in Iraq. So it's a crazy world. But I think the basics. I think at least the investment community thinks that those big issues aren't going to really affect the U.S. or the economy. Have China encroaching on the South China Sea. So these are big uncertainties. So nobody can say for sure. The dollar is like a safety valve. People go for it when times are dangerous. And it took on, that really occurred full force in 2008 during the crisis when people saw that the United States Federal Reserve was bailing out banks and even insurance companies in Europe. It became even clearer that the U.S. central bank is the bank of the world, the central bank of the world, in effect. So what you might be seeing is a much bigger demand for dollars on a more permanent basis than we've seen in the past. I've been saying that we've been printing so much money that we could and should really have inflation by now, but it hasn't occurred. So when things don't happen that you predict, you have to think about other possibilities. And clearly, when you have a lot of currencies circulating, what currency gets used is a matter of choice, and it can flip. People's perceptions about the value of a currency can flip. So my sense is that people have decided that the U.S. dollar is something they want to have a lot of. And it's not just U.S. households, but foreign households and people in the underground economy around the world, foreign governments as well. So I think that's the only real explanation you could come up with for what's going on here, that there's just been a big increase in demand for dollars, and that's put downward pressure on prices. If people want to hold a lot of dollars, then there aren't that many dollars circulating, and therefore there's not so many dollars chasing the amount of goods and services. That's why prices don't go up as much. So I think that there's arguments for why we could have continued low inflation. I don't think we're really going to have deflation, but things could turn around. The banks could start lending out their huge excess reserves, which are far above $2 trillion, and we could have people realize how much money the government's been printing and what kind of fiscal position the country's in. So what I'm trying to get across is that prices and the value of a currency, which is certainly connected to the price level, they can flip on a dime. These things can change very quickly. And it has to do with psychology, how people read the fiscal and economic situations of countries. Right now, the U.S. looks like a pretty stable place compared to a lot of places.
Yeah. One thing I found interesting, China being in its ascendancy, supposedly, and yet, we see all these wealthy people basically wanting to get the hell out of there. And, when the U.S. was in its ascendancy and building its wealth, and all these robber barons, whatever, wealthy people, they weren't fleeing the country. And this is a real phenomena happening in China, where the wealthy just don't want to be there for a variety of reasons, whether it's rule of law, whether it's uncertainty over whether they're going to be arrested from one day to the next, whether it's the pollution or a number of reasons. They're getting out of Dodge, or at least have their escape hatch, their escape route planned. And, it's just interesting to see that that the wealthy really don't have confidence enough to really plan their future there.
Yeah, well, I think that's an interesting observation. A lot of rich Chinese do leave. But China's been a pretty stable place for capitalists for several decades now, and you don't see the government confiscating anybody's wealth, whereas you do see that in Russia. So I don't know whether they're just diversifying, whether they're saying, well, let me take some of my, it could be that they got the money illegally and they're hiding it in London in some apartment, or they're just trying to diversify their investments worldwide. But we don't know for sure which Chinese are leaving. We have a sense that that's happening, but we also don't know. We know that money's going into China, so it's really hard to say for sure. But I think the more the Chinese government acts in an aggressive way towards its neighbors, the more you'll see people leaving the country with their money, and the more the country will suffer. That's the same thing with Russia. Russia obviously has interests that are not economic, because what they're doing in Ukraine, at least Putin has these interests, could not be worse for the economy, it seems to me. So you do have irrational things happening, and unfortunately, we economists can't predict too well where things are going to go on any of this stuff. But, it's a big surprise to me that we haven't had very high inflation. And if people, I think, understood the degree to which we're broke as fiscally, we would have inflation. So, and there's a lot of people on Wall Street who understand that, but they think that nobody else understands it, or they think that everybody else does understand it, but that nobody else is going to act on it because they think nobody else is going to act on it. It's one thing to lose money with a whole crowd of people if you're a broker or a trader. It's another thing to lose money by yourself. You lose money on Wall Street by yourself, you get fired, not rehired. So I think I think we're seeing what we economists call multiple equilibria. The economy can be in a lot of different places. There can be a lot of different scenarios about how things get resolved in the future. There's a lot of uncertainty, and we can't predict which kind of equilibrium the economy is going to go down, because it's very much just like a lot of things. People feel much more optimistic about the U.S. and about the dollar than I do, about U.S. long-term inflation, about U.S. long-term bonds. I wouldn't buy those things. I think they're probably the riskiest security out there personally, but other people think they're safe because they're buying 30-year bonds at very low long-term interest rates. I think they'll be wiped out, but I'm not the majority opinion. If I were, the market would have moved.
Yeah, well, that old saying, the market can stay irrational longer than you can stay solvent, right?
Yeah, and that's true. And I think we can't really trust the market insofar as the market's, whenever we see a big swing in the market, it's because the market's really been wrong. That from 1 minute wrong, or that the psychology just shifted and we have a new equilibrium. Think about what happened with Bear Stearns. I think their price of their stock was like $17 a share a week before they went under. A week later, it's $2 a share. Now, what happened was that the assets of Bear Stearns didn't change. The management didn't change. What changed is that everybody thought that everybody else was going to dump Bear Stearns stock and that nobody was going to lend to Bear Stearns. So it was a big run on Bear Stearns, a psychological switch of opinion. That was produced a lot by text messaging of brokers, hedge fund managers texting information to other people that they were pulling out of Bear Stearns, and bingo, it was off to the races.
That could happen again, right?
That could happen with any, as Dick Fuld, the head of Lehman Brothers, said, this could happen any firm at any point in time, because that's the nature of banking. It's a confidence. It's a confidence game because there's no real disclosure. That's the core problem that's not been addressed by Dodd-Frank or any other, quote, financial reform out there.
And it really can't be addressed because fractional reserve banking means and over leveraging, when you've only got a couple of percent of your deposits sitting there at any given time, and that the Federal Reserve is waiting there at any given moment to bail you out, right? So,
I think the bailout there, the implicit put, I guess, in the insurance, the implicit insurance that the Wall Street's been getting from the government makes it hard to think of, they have no incentive to move the system into anything better because they're taking the upside, and the private sector is taking the downside, the public. So it's a good deal for them. But we certainly could devise, and I've written this book called Jimmy Stewart is Dead, which talks about how we fix the banking system with disclosure, with full disclosure of what the financial companies are holding, and also with mutual fund banking that has no debt, so that there's no leverage, so there's never a possibility of a failure of a financial institution.
Makes sense. And when we return, let's talk about solutions, because that's really what the world needs on the Financial Survival Network.
FSN Radio. It's all about what's next.
Urgent alert. Ex-Secret Service agent claims it's worse than people know. One of Obama's former Secret Service agents recently smelled a rat. What he discovered inside our government was so devastating, he only saw one option. He quit. What's worse, he fears what he found could affect your job, your neighborhood, and most importantly, your family, very soon. It's worse than people know, he said in a recent interview, and I'm not trying to scare you either. We too share his concerns. This is why we've devoted the better part of 3 years collecting solutions for nearly all problems created by intrusive governments, and we've succeeded. Go to hiddensecrets1.info to check out all the details. Our panel of insiders have devised a legal but sneaky set of solutions to help you reclaim your privacy from the NSA, opt out of Obamacare, and make a bundle from little-known investments and small business opportunities. Simply visit hiddensecrets1.info. That's hidden secrets, the number 1.info.
FSN Radio. It's all about what's next.
Do you have Medicare or health insurance through your employer? If so, listen up. The healthcare reform wasn't written to save the healthcare industry or even to lower healthcare costs. Shoot, it isn't even designed to insure the uninsured. It's just a temporary political byproduct. Like a flat rock you step on in a swiftly moving stream, Obamacare is just a means to an end. Want to learn more about Obama's ultimate objective? Then you'll want to review our latest research presentation found on oclies.com. In it, a health expert and industry insider explains what you think you know about caring for your health is about to drastically change in 2014. Plus, he details the simple steps you could take to save thousands of dollars per year in health costs. It's free for you to preview at oclies.com. Don't waste time. What you don't know about the healthcare reform could hurt you and your family.
The Financial Survival Network. It's all about what's next.
We're back with Professor Laurence Kotlikoff of Boston University. Just happens to be my younger daughter's alma mater, and she got a good job as a result of it as well.
That's great.
In the midst of the worst job market since the Great Depression, I might add. So we're grateful for that. And so solutions here. FDIC, worst thing they ever did as a practical matter.
Well, the FDIC is available there to come in and try and restructure failed banks. Now, had they been able to take over Lehman Brothers, they might have saved us from having a great recession, because they could have come in and calmed things down perhaps and got some other investors on board over a certain amount of time. But maybe not, because there's a limit to FDIC insurance. There's also a limit to how much money the FDIC has in reserve to cover losses. And once people realize that the FDIC basically has no money, it's really got potentially $6 trillion in liabilities and maybe a few $1 billion to cover those liabilities. So when you really understand that the FDIC is a bit of a shell game, you start wondering once people woke up what they would, in the context of a really big bank going under and the FDIC not having the funds to cover the liability, and the Fed having to print money, and then people starting, if that printing of money became clear in people's mind, then everybody might run on every bank. The FDIC in that context would probably have to print, well, the Fed would have to print about, my count is about $12 trillion almost overnight. If all the banks, commercial banks, were run on, and the insurance companies and the money market mutual funds were run on, the Fed would have to print $12 trillion. Now, if you think of the Fed printing $12 trillion, what that would do to the price level, that would certainly have to raise the price level. And in that context, you wouldn't want to leave your money in any of those institutions. You want to take it out and spend it and buy some Campbell's soup or something. The shotgun.
Yeah.
The basic story is that this insurance is not really an insurance it's insurance that's only as good if everybody believes it. If everybody believes the insurance is no good, then everybody runs on the bank, and then things go down. The banks close. Now, if you look at Argentina in 2002, they told everybody there's deposit insurance. Don't run on the banks. This is after they went off the dollar peg. And people in Argentina are used to what happens in these countries when everybody runs and when the government has to print money and inflation. So what they did is they listened to the government say that they had insurance for their deposits. They immediately went to the bank to get their money out. So it didn't stop the run. So I don't think the FDIC is in any, it's credible right up to the point where it's not. It's not really an insurance. It's a bit of a fraud in terms of insurance.
The thing is, we really can't have a bank run in the old-fashioned, like 1930s way you have a bank run, because big corporations, they can't get it in cash, so they're going to get a check. And what are they going to do with their check? They're going to take it to another bank that's equally as insolvent as the bank they got the check from and deposit it. And individuals, we're the cashless society, so you're not going to be able to get cash at your bank. You're only going to be able to get your debit card loaded or whatever. So
what happens
bank runs are obsolete here in the United States. It just is not a practical matter. You'll get a check that you're going to go to another insolvent bank and deposit the check. It's just, I'm afraid, I don't really think it's a possible scenario in the conventional sense of what happened in the 30s, where you lined up around the block and they gave you cash. We're phasing cash out. We don't get new cash anymore from our ATMs and our banks anymore. And once cash is phased out, which is going to happen pretty shortly, I just don't see a conventional bank run ever occurring. They're going to pay you in Bitcoin, or what are they going to do?
Well, it's basically promising that in all states of nature, in all situations in the world, that you're going to have the same real net worth, which is like cans of soup.
Yeah.
And if that can't be, if that can't be produced by the government will be printing money, and
they'll be giving you electronic units, which will be moved around, and maybe they'll have value and maybe they won't. But the concept of people waiting around the block, around the corner, I just see that as obsolete. I don't think that's ever going to be, because the average person now, I don't know if you caught the recent survey, Professor, but the average person, 40% of them walk around with less than $20 in their pocket, and many people walk around with no cash in their pocket. So the cashless society is making the future of bank runs meaningless.
Well, I wouldn't say that, because if you take down institutions, I mean, think about a bank run where everybody pulls their money electronically out of Lehman Brothers, or maybe Chase.
Yeah.
JP Morgan Chase. They're taking their money out today. That leads JP Morgan to have a fire sale of assets, and they put it in maybe in some other bank. That bank, the people that own those assets lose value. There's a big redistribution of wealth. There's lack of confidence in the economy. Output, people get laid off. Employers get scared. You see all the get a switch in equilibrium, and then prices go up because the government stepped in to print money, which it has. It could certainly happen. It has been happening. Then you could see people's existing account balances, although they may still be in some financial institution, drop in real terms. So they've been, in effect, defrauded that way through the back door. So it's not like the government can promise cans of soup that it doesn't have.
Mm-hmm.
The government can make promises about electronic money or cash or physical money, but it can't promise the Campbell soup will be producing, and actually the government will have the resources to get those cans of soup into your cupboard.
Yeah, they can't guarantee the purchasing power. They can guarantee you the nominal value of your account. That's it. And that's so JP Morgan Chase has this run, and they call up the Federal Reserve and say, get the computers going. We need units, and here's all our collateral. It's yours now. And in a way, all these too big to fail banks are really part of the Treasury or part of the Fed anyway. You know, they kind of ceased having a individual corporeal existence in 2008.
Yeah, I agree with that. I mean, the Fed, in some ways, nationalized the entire banking system, or became the bank of the country, and the other financial enterprises were like local branch offices, including RV. Guys who are trying to finance RV or would give you loans for RVs to buy. So, but the point is that when you have a big institution go down, people lose credibility. Again, we go back to this lack of information about what's actually being held by these financial institutions. And then you have an information run. People get scared, and they think other people are scared, so they're going to run, get the money out. There's fire sales of assets, and then people get scared, and it flips the economy. So it's not that the payment system breaks down. The payment system at some level can't break down. You're always going to be able to swap something for something, right? It could be you're swapping. You've got an old laptop that you swap for a piece of pizza from somebody. That's still a payment system. But the question is, at what level of economic activity is the economy going to operate? And that's the real issue behind the bank run. It's not the banks, any particular institution failing, the payment system itself collapsing for good, commerce not being able to operate whatsoever. That's not really what happens. It's really a panic sets in the minds of the employers. They say, gee, I think the other employers are scared. Whether they're scared for good reason or not, I don't care. I think they're going to fire their people, and I know their people are my customers. So therefore, I'm going to fire my people before my customers stop showing up. And of course, my people are their customers. So the whole thing goes down the tubes.
Yeah, it's a daisy chain.
Multiple equilibria. That's what we call it.
Yeah, so interesting, the concept, though. And the whole economy functions on confidence, right? Confidence that pretty much tomorrow is going to be pretty much like today, and next week will be pretty much like this week, and next month will be like this month, and on and on and on. And when some event occurs that disrupts that confidence, it's real hard to continue on. And
just the extra little straw in the camel's back, like a couple banks in Cyprus failing, right?
Mm-hmm.
That put a big panic into a lot of people in the investment world, because they thought, gee, if those depositors start running on the Cypriot banks to get their money out, and then those banks are going to fail, they're going to have to asset sales, and people in Greece are going to see what's going on in Cyprus right next door. They're going to run on their banks. People in Italy are then going to see this, and then they'll run on their banks. It's just going to spread. And all of this is turmoil. It doesn't matter that if everybody kept doing what they were doing, that everything would stay the same. People don't realize that everybody's not going to keep doing or they think everybody won't do what they used to do, and therefore the self-fulfilling prophecy of panic.
Exactly. Exactly. So, hey, we want to find out more about your purple plans and the Jimmy Stewart book to get that. Oh,
okay. Well, Jimmy Stewart is Dead is, I think, a fun read about how to fix the financial system and what really happened in 2008 and how other things really operate there on Wall Street. I have been working on how to fix certain aspects of the economy, including the financial system. And I summarize those proposals on a website called thepurpleplans.org. We have to fix Social Security. So there's a Social Security plan there, the tax system, the tax plan. There's a plan to fix the healthcare system fundamentally, which hasn't been fixed, and fixing the banking system and other things as well, environmental issues. So the purpleplans.org is a place to see where one economist at least, what kind of simple solutions economists would favor to get us out of this rut. And these plans have been endorsed by a lot of top economists, so they're not just my own wishful thoughts, they're other people's wishful thoughts as well.
So Obamacare didn't fix the health system. Shock. Anyway, you can find the link to the purple plans on the Financial Survival Network website. And don't forget to sign up for the newsletter. Thanks so much for coming on, Professor. It's always enlightening and a pleasure.
My pleasure. Also, Kotlikoff.net is a good place to go to, which is my main website. Just my last name.net.
All right. Excellent. Thanks so much.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.